channel. I'm going through YCharts Peter Lynch Universe. They screen for stocks based on whether or not a company has a small cap, low PEG ratio, a reasonable debt to equity ratio, and something of a dividend to come up with 35 stocks. I've done videos on a few other ones, and right now I'm going to be looking at a new entrant on the list. It's called Warrior Met Coal Inc. The ticker symbol is HCC. So let's take a quick look at this. Again, this isn't a recommendation. I don't know a lot about this company. So make sure you do your own due diligence if you're planning on investing in any of these companies that I'm covering. YCharts gives this an attractive Y rating. It does these things where they have Y ratings. Value score of 10 out of 10, so they consider it very has some value. Fundamental score is 7 out of 10, and it's positive 29.82%. Undervalued by its historical multiple. It says here, Warrior Met Coal is a U.S.-based company. It produces and exports met coal that operates 2 underground mines in Alabama. The company sells to steel manufacturers in Europe, Asia, and South America. Its mining operations consist of 2 underground met coal mines in southern Appalachia's coal seam and other surface met and thermal coal mines. So it sounds like it's producing coal, met and thermal coal. Met is used for the production of steel. Thermal is really just for producing energy. So coal miners have been seeing a bit of an upswing lately. A lot of these kind of commodities, the energy commodities, have been doing really well. Oil, natural gas, I guess it depends on where you are. There's really a lot of regional influences that come into play when it comes to the price of natural gas. But coal being something you can kind of export anywhere, especially if you're like doing manufacturing of steel, you're probably going to get some good prices for it. Places like China, where they do a lot of steel manufacturing. So yeah, I know steel also has been doing pretty well lately. I might have to do another video on that, maybe just like taking a look a little bit at the steel industry, because it's definitely been on that like non-existent kind of like watch list for a really long time. But to see some steel companies maybe starting to produce profits again is sounds interesting. But yeah, anyways, Warrior Met Coal. It has a market cap of just over $2 billion. A very small dividend. Dividend yields on 0.71%. The 5-year revenue growth is 8.26%. Quarterly revenue year-over-year growth, not so great, negative 17%. EPS diluted 5-year growth, 7.54%. EPS diluted quarterly year-over-year growth, negative almost 28%. So quarterly year-over-year growth hasn't been great, and somewhat anemic growth over the 5-year trend, which is kind of what you would expect, I guess, after 5 years in a coal company. But the debt to equity ratio is 0.209. The return on equity is healthy at 53.65%. And yeah, the PE ratio is quite low, 3.157. And what else? It looks like this company has seen some insider ownership increasing, especially recently, which is always a good thing. It's really interesting to see. I would like to actually maybe find another report and dig into this a little bit just to see kind of like what's happening with the insider ownership. But generally that's a good thing, especially like with like these kind of like cyclical kind of companies. If the insiders are buying, it's usually a good sign of good things to come. But yeah, anyways, let's look at some of the key stats. The cash and short-term investments, it's got $838.09 million in cash and short-term investments. I'm going to guess that's been going up recently. Yes, it has. So yeah, you can see here they're getting a lot better price for their coal, and it's being shown in the balance sheet. So yeah, quite a bit more cash than they've had for the last few years. So the question always becomes like, what do they do with that cash? Do they pin down debt, or do they give it back to shareholders as a dividend? Do they reinvest it? What are they going to do with that cash? So let's see, long-term debt right now it stands at $300.259 million. It looks like it's been coming down. September 18 it was $467.59 million. And actually, even as much as like what, December 21, it's 339.81, 340 in June of last year. So they're paying down debt a little bit. But like, it sounds like they have like a lot of cash, so they could probably pin down their debt even more if they really wanted to. But yeah, that's something you would have to, like, I guess, find out from reading the annual report. I might put this on my watch list and maybe dig around on that annual report to see kind of like what their plans are with this cash. And I mean, if you're a believer in coal, maybe seeing a bit of a turnaround over the next few years, I kind of feel like the inflationary issues that we're dealing with aren't going to be going away anytime soon. So I suspect these kinds of like sources of energy that have been shunned for a very, very long time, not just coal, but also oil and gas, are going to continue to see much more interest, especially as things become more expensive. Coal is definitely a cheap energy source, so it's not surprising that you're seeing money kind of flow into these once shunned companies. But yeah, what else do we kind of see here? There's a dividend yield. Yeah, again, it's pretty modest. That'd be great to see some increase in dividend. Again, I have to go back to the annual report, maybe see what management has planned with all that cash. Have they been buying back shares? Let's see here, buying back shares. Actually, no, they have not been buying back shares. There's a modest, very modest increase in shares. Let's see, the PEG ratio is very low, 0.0097, almost zero. So the PEG ratio being where it is, it would suggest that this is undervalued. So yeah, that's Warrior Met Coal in a nutshell. That's a very quick overview. Again, I might actually put this on my watch list. I've been looking at a few other coal companies. I definitely am a big believer in oil and gas. My own portfolio's got quite a few names in oil and gas. And you see other like investors like Warren Buffett buying like Chevron, Occidental Petroleum. So yeah, I'm kind of a believer in this these alternative energy. They're not really alternative energy, but considering how shunned they've been over the last few years, they kind of you can almost consider them almost like an alternative energy. But I'm sure they're going to be coming back. As you can see, a company like this, Warrior Met Coal, with its balance sheet kind of ballooning like this. Yeah, coal is priced well, and there's a lot of demand for it. So whether or not that continue, we'll see. But yeah, Warrior Met Coal. Yeah, if you're interested in keeping up to date with what's happening on the Peter Lynch universe, be sure to subscribe to this channel. I'll be updating it with like more videos and just kind of keeping up to date with what's happening with this list of 35 stocks. Also, you can check out my website, peterlynchinvestor.com. I update that site routinely with this list of 35 stocks. There's a newsletter there as well. If you subscribe to that newsletter, you'll be able to keep up to date that way, as well as I kind of ping everybody every once in a while when there's a update to the Peter Lynch universe. But yeah, I hope you enjoyed that, and again, subscribe if you want to see more videos like this. Thanks.